Hi friends, in this module we are going to discuss on chapter 3 admission of a partner, question number 31 to 33. So X and Y are partners sharing profit and losses in the ratio of 3:2. Goodwill appears in the balance sheet at rupees 60,000. Z is admitted as a partner for 1/4 share in the profits. The total goodwill of the firm valued at rupees 2 lakhs. Pass journal entries if Z cannot bring in cash as his share of goodwill. Z brings in cash as his share of goodwill. Two scenarios here. Okay, so let's understand the question. We have two partners, X and Y. Their profit sharing ratio is 3:2. And there is a goodwill which is appearing in the books, which is 60,000. So this is appearing in the balance sheet, that is 60,000. Then there is a new partner Z who is admitted into the firm for 1/4 share of profit, and the firm's goodwill is calculated as 2 lakhs. Now first we need to understand Z share of goodwill. So Z share of goodwill is equal to firm's goodwill. We have the firm's goodwill here, which is 2 lakhs. Okay, that Z's firm's goodwill that is 2 lakhs multiplied by Z share of profit, which is 1/4. So Z share of goodwill is equal to 50,000. Okay, now we wanted to pass this journal entries in two cases. First, Z cannot bring in cash as his share of goodwill. So we will pass this journal entries. First is we have to write off the goodwill that is appearing in the balance sheet. In the balance sheet there is already some goodwill appearing, so that has to be written off to the old partners capital account in their old profit sharing ratio. We have 60,000 as goodwill here. So the journal entry is X capital account debit Y's capital account debit to goodwill. So goodwill appearing in the balance sheet is 60,000. Now we have to divide it in the profit sharing ratio between the old partners, which is 3:2. So that is 36,000 and 24,000. Now let's move on to the next journal entry. So in the first case, Z cannot bring in cash as his share of goodwill. So if the new partner is not bringing in cash, his current account will be debited. So Z's current account debit. We already calculated his share of goodwill, which is 50,000. 50,000 to old partners capital account in sacrificing ratio. So to X capital account to Y's capital account, and the sacrificing ratio is 3:2 itself. So 50,000, it will be 30,000 and 20,000. Okay, in the second case, Z is ready to bring cash for goodwill. So in that case, bank account will be debited. Bank account debit 50,000 to premium for goodwill 50,000. This premium on goodwill will be credited to the old partner's capital account in sacrificing ratio. So premium for goodwill account debit 50,000 to X capital to Y's capital. That's going to be 30,000 and 20,000. Now let's move on to the next question. Question number 32. X, Y and Z are partners sharing profit and losses as to X 1/2, Y 1/3 and Z 1/6. As from 1st April 2018, they agreed to admit A into partnership for 1/6 share in profit and losses, which he acquires equally from X and Y, and is to bring rupees 50,000 for his capital and rupees 20,000 as premium for goodwill. A paid his capital money, but in respect of premium for goodwill, he could bring in only rupees 15,000. You are required to give the journal entries to carry out the above arrangements. Work out the new profit sharing ratio of the partners. Okay, so let's understand the question here. We have three partners here, X, Y and Z. Their profit sharing ratio is 1/2, is to 1/3, is to 1/6. Okay, they admitted a new partner A for 1/6 share of profit, and which he is acquiring from both X and Y in 1:1 ratio. And for this new share, he is going to bring 50,000 as his capital and 20,000 goodwill. 20,000 goodwill is calculated for his new share, but out of this he is going to bring only 15,000 cash. Okay, first we need to calculate the sacrificing ratio. We already have the sacrificing ratio, which is 1:1. So sacrifice that is made by X and Y. So X, his current share is 1/6, and he sacrificed 1/2 for A. That is equal to 1/12, and Y, his current share is 1/6, and he is sacrificing 1/2. That is 1/12. Now this is a sacrifice that each of the partner X and Y has made towards A. So we need to find the new ratio. For X, his current share is 1/2. He sacrificed 1/12. So minus 1/12 is equal to 6 minus 1/12, which gives 5/12. Then we have Y. His current share is 1/3 minus 1/12. That is equal to 4 minus 1/12, which is equal to 3/12. Then we have Z. His share is 1/6. If we wanted to keep the same denominator, it is going to be 2/12. Then we have our new partner A. His share is given in the question. It is 1/6. If you wanted to keep the same denominator, it is going to be 2/12. Now we have the new profit sharing ratio between X, Y, Z and A. That is 5:3:2:2. Now we need to look for the journal entries. The first journal entry will be A is going to bring 50,000 rupees towards his capital and 15,000 rupees towards his goodwill, and his total goodwill is 20,000. So first journal entry is bank account debit $50,000 plus this 50,000 plus 15,000. It's going to be 65,000. To new partners capital, so A's capital, to premium for goodwill, that is 50,000 towards capital and 15,000 towards goodwill. Now the goodwill has to be distributed towards old partner. So total goodwill is 20,000. So first is premium for goodwill, debit 15,000, the amount of goodwill that is bought in by cash. Then the remaining amount, so 20,000 minus 15,000, we have 5,000 remaining. For that, A's current account is debited. A's current account debit 5,000. So this 20,000 of goodwill has to be transferred to old partners in sacrificing ratio, to X capital account to Y's capital. Sacrifice is made only by X and Y in 1:1 ratio. So 1:1 ratio means 20,000 into 1 by 2, which is 10,000 and 10,000. Let's move on to the next question. Question number 33. A and B are partners sharing profits in the ratio 5:3. They admit C into the firm for 3/10 profit, which he takes 2/10 from A and 1/10 from B, and brings rupees 1,50,000 as premium in cash out of his share of rupees 3,90,000. Goodwill account does not appear in the books of A and B. Give journal entries and the new ratio of A, B and C. Okay, so in this question we have two partners, A and B, and their profit sharing ratio is 5:3. They admitted a new partner, C, for 3/10 share of profit, which he is acquiring from A and B. From A he is getting 2/10 and from B he is getting 1/10. Goodwill that C has to bring is 3,90,000 rupees. But out of this he is bringing only 1,50,000 rupees in cash. Okay, now we need to calculate the new profit sharing ratio of A, B and C. For A, his current share is 5/8 minus the amount he sacrificed, which is 2/10. That is equal to 50 minus 16/80. That is equal to 34/80. Then we have B, 3/8, his current share, minus he sacrificed 1/10, 1/10, that is equal to 30 minus 8/80. That is equal to 22/80. Then we have C, his share is given in the question, which is 3/10. If you wanted to keep the same denominator, it is going to be 24/80. So now we have the new profit sharing ratio between A, B and C. That is 34:22:24. If we simplify it, it is going to be 17:11:12. Okay, now let's move on to the journal entry. So we know that C is going to bring 1,50,000 rupees in cash towards goodwill. The rest of thing he is not bringing in cash, so we have to adjust it with the journal entry. Okay, so the journal entry here is the portion he is bringing in cash. It's going to be bank account debit 1,50,000 to premium for goodwill 1,50,000. This needs to be distributed to old partners in their sacrificing ratio. So premium for goodwill account debit 1,50,000, and the remaining portion of goodwill, his current account will be debited. C's current account debit, and what's that amount? We have 3,90,000 in total. If we deduct 1,50,000 from it, the amount is 2 lakh. That's going to be 2,40,000. 3,90,000 minus 1,50,000, it's going to be 2,40,000. So C's current account is 2,40,000 to all partners. So A's capital to B's capital. And this has to be in their sacrificing ratio. Sacrificing ratio we already have. So A is sacrificing 2/10 and B is sacrificing 1/10. So the sacrificing ratio is 2:1. So it's going to be 2,60,000 and 1,30,000. So question number 33 is completed. Friends, do subscribe to this channel so that you don't miss out on the further questions. Thank you.